my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish long black Marobozo yesterday as the market tested the downside once again by punching down through both the November 2002 high at 101.70 and the seemingly still effective but broken lower time currently at 101.28 of the January to May 2021 bearish Andrews pitchfork. Please now remember my recent admonitions of caution on breaking below either above the upper time or in this case below the lower time. You see, back at the start of the year the market broke up over the upper time for a full week but then mended the break and continued to use the lower time. Likewise, 3 weeks ago, prices broke down through the lower time but started to mend itself last week. Hence, caution on any break lower. That being said, looking below, we have support of the interesting 61.8% Fibonacci line at 99.15 and the primary target X for the imperfect descending triangle at 99.05. The secondary harder to reach target X1 is down at 96.10 for that pattern. Meanwhile, above the November 2002 high, we have a fairly clear area until the congestion between 103.38 and 103.69, with the notable levels being the January 2017 low at 103.38 and a December 2016 low at 103.49. So far today, a reactionary move back up over the lower time and within the pitchfork, but it is a very small reactionary move at this time. Cable, aka sterling against the US dollar. An indecisive spinning top yesterday, though some could see it as a bullish harami, though I wouldn't be in that group just yet. The most notable feature yesterday was the close, the second, if lower, consecutive close above and outside the upper time, currently at 119.83 of the late April to late May bearish shift pitchfork. This is still a significant move higher as this bearish pitchfork has shown the way lower for nearly 2 months. It also puts at risk the harder to reach target X2 above at 115.30 for the recent diamond pattern. Now looking above, well, we again have the immediate resistance of the May 2020 low at 120.73. And beyond that we have the resistance at 121.54 and then again the June 2020 low at 122.48. This last one is interesting as the slowly declining short medium moving average, currently 122.40, is entwined with that, and we haven't had a close over the short medium moving average, well, since February. So far today, another attempt up at the May 2020 low, the third in a row, but so far unsuccessfully. Euro sterling. A bearish long black Marobozo yesterday and third bearish black crow as well, down through the April 2021 low at 84.70 and also the 3 support levels from the last few weeks. They are the rising medium moving average, currently 84.66, the flatlining long moving average, currently 84.42, and a September 21 to date broken downtrend, currently 84.20. These are now resistances. These last 3 have been and are still continuing to separate out and thus losing their combined potency. The low of the session was what looks like the base of the new support that had been established 2 weeks ago and yesterday. That's in the 8400 area. This move lower puts the market back within the very large falling wedge pattern, currently 84.20 to 80.91, formed many months ago. Thus, this also puts at risk the potential target X4 ambitiously up in the 88.65 area off the top of my daily chart, and a really big ask. Additionally, this also puts at risk the following targets. Target X1 in the 87.65 area for the harder to reach secondary target of the recent smaller lopsided diamond pattern. Target X3 in the 8800 area for the harder to reach secondary target for the recent extended diamond pattern. And there are the targets for the December 2021 to May 2022 reverse head and shoulders pattern, a primary target X5 in the 87.75 area and a harder to reach secondary target X6 in the 88.65 area. Targets X4 and X6 are currently just up off the top of my daily chart. Now, all these targets I've noted so far have been on the upside and are now under threat. The last and latest pattern is a late March to mid-April based large ascending wedge pattern. And that's currently 88.36 to 86.79, and unlike the others is a contrary one, a bearish pattern, and one that is now closer. This still has a seemingly harder to reach target X7 down in the 81.15 area. That's right off, was right off the bottom of my chart, but it's not that far away actually at the moment. Sorry, X7 area. One final point. I asked yesterday for you to think about whether the action since late June to date is possibly forming a bear pattern. Well, it seems a likelihood, though it will obviously depend on a break below the 8400 area. However, if it does, then we have a possible target X8 below. Now, I've mislabeled that today. I will correct that. That's in the 8300 area. That's supposed to be X8, not X7. So far today, a slightly higher open for a small test up to the broken downtrend. That was swiftly rejected. It seems the market's now contemplating a test down through that 8400 area and pressuring it and getting pushed back a little bit at the moment. US dollar against the Indian rupee. A reactionary bullish white soldier yesterday to the market's dip on Monday, below the old 100% projected Fibonacci line at 79.81, with a move and close back above it. This has halted the recent overall pullback from the all-time high made 2 weeks ago. Meanwhile, we still have the harder to reach secondary target X1 up in the 80.43 area. This is for the recent bullish measured move higher. Overall, the market is still in between the overhead middle time, currently at 80.69, and the lower time below, currently 79.23, of the January to early April bullish Andrews pitchfork. This bullish pitchfork has been running the bullish angle of attack so very successfully since the end of the first quarter. So far today, well, a small cautious follow-on higher. US dollar against the Brazilian real. An indecisive spinning top yesterday with the open and close near to Monday and last week's low, just above 535 even. This comes after Monday's strong reactionary bearish open and close long black Mariboso. Looking at the larger picture, we still have a potential topside primary target X in the 568.85 area and a harder to reach target X1 off the top of my daily chart in the 584 even area, both from the March to June ugly double bottom, though the recent action, I am sure, has put a dent into that idea. Overall, the bullish Andrews pitchfork is still alive and well, with the market in between the lower time currently at 516.66 and the middle time above currently at 549.49. Further down we have the two 50% Fibonacci lines at 527.37 for the May 20 to April 22 move, and at 522.76 for the March 21 to April 22 move. In between them we have the flatlining long moving average, currently 523.60. Just keep an eye on how the market continues, or not, utilizing the bullish Andrews pitchfork as its principal bullish angle of attack. US dollar against the Mexican peso. An indecisive spinning top yesterday, though I suppose you could also look at it as a third bearish black crow. This was the result of a concerted, if so far unsuccessful, attempt to try to push down through the flatlining long moving average, currently at 20.4212. The market is currently in between the middle time above, currently at 20.7728, and the lower time below, currently 20.2613, of the late March to late June bullish shift pitchfork. We also have overhead the combination of the neckline of September 21 to February 22 head and shoulders top, currently at 20.6183, and the interesting 61.8 Fibonacci line of the July 2017 to April 2020 move at 20.6062. Beyond that, we have the neckline, currently at 20.7434, of the mid-March to early July reverse head and shoulders pattern, as well as the 50% Fibonacci line in November 21 to March 22 move at 20.7802. Meanwhile, looking below, Well, we are fairly clear until the lower time, and below that we have the medium moving average, currently 20.1641, and the short medium moving average, currently 20.1417. They seem to be dancing around each other, and I'm wondering if they're going to actually make some sort of, I don't know, golden or dead cross. So far today, a further attempt lower, breaching once again the long moving average, but making only seemingly minimal headway lower after that. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.